You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again to view some volatility. Yes, it's time for Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network, kicking it on here into Friday, noon Central, 1 p.m. Eastern. For Vol Views. That's when you can join us live. Of course, you can get the podcast whenever you feel like it. We don't judge here. That's why it's called On Demand. You demand, we deliver. There you go. All free of charge. How nice of us. So check that out, of course, on your platform of choice. If you haven't subscribed yet, what are you doing? Get on out there. Subscribe. Enjoy. Have fun. Check out some of the other programs on the network. Crypto Rundown, getting a lot of love these days, so check that out there as well. If you like maybe some volatility on the Bitcoin and crypto side of the fence, we got you covered there. Of course, a lot of other shows for you guys to digest as well. And of course, you guys know where to get at us for our polls, our questions, your comments, all kinds of good stuff. At Options, the easiest place to go on most of the major social media platforms. Just hit the website or questions at theoptionsinsider.com. Never goes out of style. Always a fun one as well. We do indeed, despite what the meatball says, we do like to hear from you guys. And speaking of the meatball, since I maligned him, it's only fair that I now invite him onto the program. We are joined by the greasiest of meatballs, Mr. Mark Sebastian from optionpit.com, by way of way up there into the stratosphere, Carmen Line Capital. Mr. Meatball, welcome back to the show. How do you speak to us when the air is so thin up there?
It's amazing. I have some shielding. I'm in a spacesuit. So
yes,
that's why you're able to hear me.
Your ability to survive no matter what the environment is truly amazing, sir. So we'll keep going before the oxygen runs out of the room as we keep on rolling right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's do it. Let's dive on into the old world of volatility. As we're recording this and streaming it live, noon Central, 1 p.m. Eastern here, we're seeing markets, again, kind of feeling the impact, maybe a combination of many things. A bit of, obviously, concern still over the trade war, the comments that maybe were not as close as some had been led to believe, and the big, joyous rally of the last week or so. Maybe some of that overdone, so some of that coming back off, sell-off yesterday and getting some of that on the screen today. Again, also seeing maybe some lingering earnings malaise as well as maybe just some profit taking from the recent run up too. So a lot of reasons why people could be hitting the bids. Either way, that's what they're doing again today. Not quite as aggressive as they were yesterday. Most of the major indices off about 1.5% at one point. Today we're coming into showtime. We're seeing the Dow actually leading the dance off about 0.75% to the dark side, followed by pretty much a tie percentage-wise between the S&P and the Nasdaq, both off about 0.5%. VIX Cash getting a little bit of life, but not a ton. Maybe kind of going into seeing what they're seeing. By the way, Mr. Meatball, before we go any further, let me just say right now, VIX Cash coming into showtime, I was pretty much at a bullseye. It was at 17.05, pretty much coming into bullseye into the showtime, which is pretty much
almost there.
Exactly my prediction. So I'm just going to claim a victory now because why not? It's fun. It's my call. I call it the hosting prerogative. But yes,
nice.
I just want to rub that in a little bit now at the top of the show because I literally was exactly a bullseye. Doesn't get as
No, I know that was impressive.
Right now,
back to back bullseyes. You know, we were pretty much on a bullseye last week. You're kind of dead on this week. So let's see how long you and I can keep a streak going.
I don't know. It's the reason people tune into this program after all. We got something cooking here. It's our VIX prognostication. Right now, though, VIX off a little bit from those levels, off about 0.3 from my exact bullseye. So it's at 1675 or so right now. So it has a whole hour to go to get a little bit of that juice back, and then it'll be an exact. By the way, still within about almost a quarter of a point. So we'll take it over here on our VIX prognostication line. If you've ever played this game, if you've ever tried to wrestle the most slippery of pigs, that is VIX Cash, then you know just how much of a bullseye that really is. So yeah, VIX Cash getting a little bit of a lift, but the rest of the week has been kind of a bit of a malaise. We saw a bit of a spike earlier this week again to about these levels, 17.5, 1770 or so. Then it kind of came right back off again, down to about the 16 handle, then down to the low 16s before getting a little bit of lift again as we saw sell-off mode kind of returning, keeping us back. Like I said last week, I thought we'd get down for a while, and then something would kick in towards the latter portion of the week to get us right back up to a little bit around where we were last week, which was in the low 17 range, and pretty much that's what we've seen so far. So not bad for us on the prognostication side this week. Our old friend VVIX, also an interesting one to watch as well. 87.5 right now. VVIX, of course, the volatility of VIX. You listen to this show, you probably know that, but we get new listeners all the time. You never know. 87.5 right now, so still on the fairly tepid side of the spectrum. You know, it kind of dips. I've said before many times on the show, there's a bit of a range. The extreme near-term low end of that range is about 75, and then on the upper end, when it starts getting north of the 100 level into the 120 range, that's when things really are, whoa, pay attention. But we actually did flirt. That 75 level is a fairly rare one. We did flirt with it this week, Mr. Meatball. 76.45 earlier this week. I know that came on your radar over there as well. So let's talk a little bit about that, about VVIX, what your thoughts are on VVIX kind of taking a nice little dip to almost 75, my lower end of my range, as well as what else caught your eye this week from a vol perspective, sir?
Yeah, that was quite the dip. I think we basically have found the low for VVIX. If it gets below 80, it should be bought because it quickly popped to 85. And markets have not really looked back, have they? And that's really what we're dealing with.
No, and I've been saying that for a long time. 75 is kind of the effective bottom. And obviously, it could dip through that, but you don't really see it very often. And when it gets to that level, you're right. People start coming in. They want to get themselves a little bit of vol action. So, yeah, that's why I've always said for a long time, 75 has kind of been my 75 to 125 kind of range. That 125, obviously, pretty extreme. That 75 also, as we're seeing now, pretty extreme as well. Doesn't like to hang out there very long if it can avoid it. So, yeah, interesting stuff. But I digress, sir. What else caught your eye this week?
We had some continued earnings, and that's really about it. I mean, we had a little bit of a little bit of a sell-off, at the end of the week, but really, it's been kind of tepid. The VIX has not really, despite you being right now, the VIX has not really made any kind of crazy moves on this. The sell-off feels a little one-off-ish, we moved too far too fast, and now we're going to take a breather more than it is anything else. I just get the feeling that, traders were looking at what had happened over the last couple of weeks and said, boy, that was really fast. And this is an opportunity. We're only a couple $100 off the all-time high. You got an opportunity to take some money off the table. You're kind of a dolt if you don't.
You are a dolt indeed. You know what else has been kind of doltish of late? It's kind of been weird are the VIX futures. We've been talking for a while about how they're kind of just eerily, weirdly flat. And we were seeing a lot of that coming into showtime, actually, before VIX has taken VIX Cash took a little bit of a break when it was still hovering right around a little bit north of that 17 level. Then we saw things were extremely flat. We saw the future, the cash was flirting around 17 and a quarter. We had the front month future at 17 and a half, so pretty much a quarter of a point premium for that Feb future to the cash, and about not even half a point premium to the March future and the cash, which are both markedly lower from where they were a week ago. It was about 3/4 of a point premium on the front month last week, and about almost a little bit, actually about half a point premium on the difference between the front month and last week, and about 3/4 of a point's difference between the second month and the cash from last week. Now, of course, VIX Cash dropping a little bit. We all know the futures don't play ball as rapidly, so that's widening out a little bit. But still, things out there, if you get into that latter portion of the range, you get to March and April and May and June, things are fairly flat. March and April, both pretty much at similar levels, right around the 1740-ish range. March just ticked up to 17.5. And then we see the May and June both at around 1760. So there's still a lot of flatness. You got to, if you go out to, let's see, if you got to all the way out to October, you get up to, dare I say it, 18.5 roughly. So it's still not a lot being priced into this curve on the farther end. That middle is still kind of that plateau, flat camel hump, if you will, out there in the futures. Mark, anything catching your eye out there this week in VIX futures land, sir?
Yeah, that really weird futures movement we saw. Basically, Feb at this point is kind of on its own, and really March has kind of become the de facto curve. And so you've got March trading over Feb and March trading over April. So we've got a little bit of backwardation, but at levels that are a little low for things to get backward, unless the VIX was coming from 11, which, by the way, that's really, I think, been the story, right? I mean, look where VIX is, and then look how quickly futures have been willing to go backward. And that's, I guess that's the moral of the story, is that there is a lot of quick hedging within the VIX futures. So people that don't think the VIX futures are relevant anymore, look how quickly that curve moves, and it tells you that people are stepping in and buying a bunch of it. So I'm really kind of interested in, what the next week looks like.
Who would dare to say that VIX futures are not relevant, sir? We've said it many times on this show. The answer to all volatility questions are lurking somewhere, right, in that curve. You just got to find it.
Oh, yeah.
You got to do a little digging.
Well, now we've got the complexity of spikes joining the fray.
Yeah, I'm actually looking forward to that. I don't want to talk about it too much now because we have a listener question about it, so I don't want to front run them. But yeah. I'm excited about that for many reasons. Not just the fact that we have a new entrant in the vol space. How long is it since we've been able to say that? That just for our own sanity's purpose on this program, it's refreshing. We love VIX. We obviously talk about it a lot, but it's not the only game in town, and we would love to see others, get out there and get some shine, get some market share, get some volume. And so I'll
be interested in what the cross margining of that looks like for for VIX itself.
There's a lot
to see.
I guess we can answer this question now. We'll front run this. Well, I'll just give him his credit now so they don't feel left out. Who was this person? Frank Ortega. You want to know, are you psyched for the launch of spikes? And he's, of course, sent us the link to the Bloomberg article everyone saw where they called it a VIX copycat. Very charitable title. VIX copycat. Coming as exchange tries to break SIBO monopoly. That's the Bloomberg headline. You got to love that. Where are they coming from in that article, I wonder? And then your buddy F. Contango also chiming in, saying he wants to know about VIX versus spike pairs trading, anyone? And yeah, I think just in general, I mean, look at the history of this show. You know, we obviously talk a lot of VIX, but we actually launched it in partnership with the VolX guys, trying to get the real vol. So we've always been fans of new entrants, new participants in the vol. We've had Scott Nations on here talking about his products. We've had the MIAX guys talking, and if all goes well, they'll be on here again soon talking spikes, which I'm quite frankly looking forward to, because A, we talk a lot of VIX and we like it, but there's more out there. B, the people at Salvo can't talk a lot of VIX right now because they're all tied up in all the litigation there. And it's nice. Right. It's also nice just to see another exchange playing in the volatility space finally. You know,
how
long has it been?
What we need to do, what we need to do is get Don over here to have a debate about the value of implied volatility, and see how that goes with the spikes guys. Because I can tell you, I can't imagine it going any worse than it would go with the Salvo. So, you know, maybe we could have that as a test of brains. But
well, I'm telling you right now, he is definitely listening to you right now, and he will be writing to me certainly after the show to tell me his thoughts on your comments.
I know. I just wish, I wish that vol product had gotten off the ground. I keep waiting for them to come up with something, and they're just not getting there yet. And hopefully that'll change. But I think this is exciting, having this product. And if they can get people to trade it, it's going to be it'll be interesting to see how that trades against VIX. And most notably, I'm interested in how they're going to margin that, Yeah,
there's a lot of questions I have for it. Now, hopefully when those guys come on, we'll get to ask them about, there's the underlying. How do you hedge it? The cross margining, all these things. You're right. There's a lot of things.
Yeah, they don't have an underlying?
Not that, as far as I've seen, there's no future you can go out to, I can hedge like you can with it's a SPY basket, I think, effectively.
So you're basically, Salvo almost doesn't mind if this thing goes, it kind of works. Because you're going to have to hedge it with VIX futures.
Yes,
is what you're telling
exactly.
me.
They should love that. They should be all over this. Especially right now, we've seen the volume for January off 50% in the futures. They could use a little shot in the arm for the futures. So yeah, I think having something that could obviously maybe attract more retail. It's on a retail friendlier product like SPY versus SPX. So there's a lot to it that I think is interesting. And they, as I said on this program before, they're attempting to solve that issue that surrounds VIX right now with their dragging impact. Again, we have to see it launch to see how that works. But again, it's just exciting to have more stuff. And judging by all your feedback out there, you guys want more players in the vol space too. You guys are always writing, what about this? Is there a player that could do that? Is there some product out there that can do X, Y, and Z? So you all want different flavors of vol. So more at the end of the day is kind of just a good thing. So I'm very excited about that. And hopefully, listeners, you guys will be hearing from them pretty soon on this program, and then we could hear directly what's going on with the margining, what's going on with the volume, what's going on with the underlying, all these cool stuff. Because you can ask me, but I'll just put it to them, and then they'll give me the answer back. So you can just ask them directly, hopefully soon, and then we'll get to all that fun stuff in a little bit. But yes, short answer to all your questions out there. We are excited. You said it many times. We like to have new players in the space, new products to talk about in the vol space is always fun. And it's been a while, quite a while, since we've had one to sink our teeth into. So I'm looking forward to this one. Speaking of sinking our teeth into things, let's see what you guys are sinking your teeth into right now in VIX land. Coming into showtime, we saw not quite a rock'em sock'em day, as you might expect. This is a sell-off, but not a huge one, so people aren't super spooked. We're not seeing a ton of volume going up as a result. About 156,000 contracts was on the tape. Coming into showtime, ADV just shy of 500,000 contracts, almost literally unched within 1,000 contracts of where it was last week. So ADV hasn't really changed much from a week ago either. Let's see what has changed out there in the top VIX positions, the big hot VIX open interest, massive black holes of positioning. Let's see what's out there. Number 10. Our old friend, the 870s, have moved down. They're all the way down to number 10 now, getting bumped down the list. 163,000 of those bad boys open out there. Then number 9, our first put on the list, the Feb 16 puts, 166,000 of those. Number 8, 30s, getting some 30 love here. March 30s, number 173,000, followed hot on their heels by the Feb 30s, also 173,000 for number 8 and number 7, respectively. Number 6, back out to April on the call side, 845s, 174,000 open there. Number 5, the second put on our list, the March 15 puts, second March of our rundown here from the bottom, at least 177,000 going over there. Number 4, our final put on the list, the Feb 17 puts, 187,000 of those contracts. Number 3, the May 37 halves, excuse me, 207,000 open there. Number 2, the Feb 40 is going up a little bit, 216,000. And number 1, once again, the Feb 37 halves. So near term, fairly aggressive upside, still dominating the tape out here in VIX land, 326,000 of those Feb 37 halves. Let's see what's been. Oh, by the way, total open interest is well shy of that 10 million level we like to look at, that barometer. About 8.75 million contracts out there, about 6.7 million on the calls, and about 2.05 million on the put. So decent, but not exactly nothing to write home about on the OI side either. Mr. Meatball, anything really catching your eye this week from a VIX options perspective, sir?
Not really. It's been kind of a slow week in general. And that's what I think has been what's caught my eye. VIX future, the curve is probably the most interesting thing going on in VIX right now. So that has been what caught my eye, was the curve movement. Yeah, I haven't seen a lot from an option space that is extra interesting.
Yeah, volume-wise, it hasn't been, like you mentioned, ADV is pretty much exactly unched from last week. That very rarely happens. Usually it's moving in one direction or the other. This week, yeah, not a ton lighting it up. A busier day was yesterday than today, but we'll look at today first. The biggest print on the tape today out there in VIX land, the 7,500, the March 26th. So that should pretty much tell you right there how much things are lighting it up. That isn't that big of a trade. Spoiler alert, listeners, for VIX land, obviously. Those are going up for 47.5 cents. Let's see, they were about 40 cents at 50, so going off near the offer side 7,500 times. That's a late print, though, so read into that execution a wee little bit there, but looks like probably maybe some surface buying. We don't know. Also, worth noting, there's a lot of OI there, so can't really tell. It's not opening, clearly. And then we also saw, interestingly enough, I guess if you add up the legs, this is actually a bigger print here. It was our old friend, the 1x2 coming back. It was the March 1721 call 1x2. Again, talked last week about how that's a kind of a favorable time for this. We were looking to see more, seeing some, maybe not to the tune of the size we were expecting. Today, 3,000 by 6,000 times, so a total of 9,000 contracts. Selling, let's see, there were $2 at 215. The 17 calls went up at 208 for 3,000 times, and then the 21 calls were 95 cents at $1.05, going up for 99 cents. So actually, looks like they could have maybe bought it, which would be interesting, buying that 1x2, 3,000 by 6,000 times. Maybe not the way I would want to do that. Again, doing it through 1x2 up there, doing it effectively for looks like about a dime either way. Whichever way they did it, again, VIX land, they like to split the uprights exactly. I'm going to be charitable and assume they probably sold that one. But again, you never know. Let's see here as well. Also, March 25 is going up 52 cents, pretty much right off the bid there, 5,000 times. Looks like some call overriding up there, which we've talked about before. There has been no reticence, no reluctance to hit bid on upside calls here in VIX land over the last few weeks. Also, 4,000 lot put spread, the Feb 15-17 put spread going up for 54 cents out there. So that's about it. Wednesday was a bigger volume day. Excuse me. Also worth noting that this is when the 1x2 went up for a little bit more size, and so maybe today's paper could be taking some of that off, which if they were buying it, that could indeed be the case. Let's see. We saw that 1x2 in March, same strikes, 1721. Yeah, exactly the same strikes going up for more size this time, 1x2, but doing it 20,000 by 40,000 times. So a total of 60,000 contracts. Doing the 20,000 times for $1.65. Again, splitting that uprights exactly. And then coming in for 40,000 of the March 21s for 77 cents, a couple of cents off the bid there. Again, you got to read into these. That's opening on the Marches, on the 21s, which you probably could intuit from the size there. But still, it looks like, again, looks like execution-wise, you have to read into that with a grain of salt, because there's a lot of ways they could play with these. If they did it tied, maybe they could adjust the levels there. But on the surface, it looks like maybe they bought it again, which would be, again, not the way I'd want to do it. Mr. Meatball, did you see these trades going up? Did you get any insight into what they were up to? And also, I'm assuming you're given our discussion last week, you were looking to get some of these off yourself. Were you trading the other side of any of these if they were buying these?
Well, I'm sorry, I missed the
March
the
17, 21, 1 by 2 going up for size this week. 20,000 by 40,000 times yesterday.
I did see that. Yeah, I gotta say, I think I like the trade, but I think they're probably not. I don't think they're going to have time to get there. I don't know. I think it makes a lot of sense. I'm not sure if it's so cheap that you're dumb if you don't do it, but they're going to have to make it a point of taking it off, and they may not have an opportunity.
Looks like they did that one for about roughly a dime or so, too. Yeah, and you're right. That was kind of my one concern about it. That, you got to have it kick in around the 21 strikes. Obviously, if you get a little close to that, you'll be good. But that by March, we don't know. If we're in another vol malaise, that could be a bit of a bridge too far. But you're right. These levels are good. I'm going to have to go out there and assume that they sold this thing, because if they bought it, they should maybe listen to our earlier shows to discuss why maybe that wasn't the trade of choice. We also did see yesterday one of the other size prints out there. Looks like a vertical financed by puts. One of our old school VIX favorites out there was the March 2030 vertical, going up, looks like for 66 cents. Let's see, 20,000 times. And let's see, what prices did they do here? Yeah, so again, they bought the vertical and then coming in, selling out the puts. Probably, yeah, it looks like they sold the puts too, which would make the most sense. 10,000 times for doing that for like 68 cents. So go figure how they figured out that level. So yeah, they did the whole thing for even money. Interesting. Mr. Meatball, how you like that? March 2030 vertical versus the March 15 puts for even money. Obviously, the puts are maybe where you got to be a little bit concerned right now, but still interesting. You liking that one a little better, maybe?
Yep.
Your excitement is just overwhelming for that trade.
I like it better than a lot of the other ones I've seen. So, it's not stupid, which is a nice thing to see from a customer.
It is not stupid. Hopefully it's not stupid if it's going up. What was that? 50,000 contracts in VIX land. So hopefully if they got
nice trade.
If they got that much cash behind them, they should at least, hopefully, we've seen it before. Size money, not always a smart money, but hopefully they got a little bit of wherewithal behind them if they're putting that many contracts to work out there in VIX land. Let's see what else is working in some other products out here. Our old friend, I still have to call it VXXB. It's not rolling off the tongue. I even find myself all the time still typing VXX into platforms, and they kick back at me. There is no VXX, and then I get upset, and it's a whole problem I have over here. But we'll deal with that. That's my own issue on another day. But yeah, I'm still not used to this VXXB. Hopefully we'll make some adjustments on that front. VXXB, though, as it stands right now, right around the 35 level, about 2 points lower than where it was when we first officially checked in with it on our last show. Today, we're seeing pretty light, about 40,000 contracts on the tape coming into showtime. ADV just a little bit shy of that 200,000 level. Let's go out there and see what's dominating the tape out here in our new friend, VXXB. Let's go from the bottom to the top here to number 10, the March 75s, 15,700 of those. Number 9, the March 22nd. These are out in the weeklies. 44 calls, so a little bit farther up the chain there. Actually, we got all kinds of stuff up the chain here. About 16,000 open there. Number 8, the June 80s. Yes, 80s. 16,000 contracts open there, followed by number 7, the June 40s, 16,300. I'm going to go out on a limb and say maybe a bit of a vertical. An interesting choice of a vertical, a 40-handle vertical, but probably quite possibly related paper given the strikes and the similarity of the OI. Number 6, the February expiring on the 8th, 34 puts, so going out today. Let's see. They're sweating it, but probably not going to happen today, especially given today's a move in the morning. If it was coming into yesterday or maybe some earlier days this week, maybe it looks like they were going to have a chance to have those pay off, but probably not so much unless we see a big move in our old friend VXXB later today. 17,000 and change of those. Number 5, the Feb 33 puts, also probably not going to happen today. Those are 19,600. Of course, he's got a little bit more time. Those aren't expiring on the 8th. And then the March 70s, number 4, 23,600 of those. Number 3, the March 45s, 23,700 of those. Maybe some vertical action there as well with the 26,000 open of the March 43s. For number 2 and number 1, still the February expiring today, 32 half puts. So it seems like Mr. Meatball, we talked about this before. We talked about it in our January expiration show, kind of the the boulevard of broken dreams that was VXX put paloozas. We did see people kind of continuing to pile in to some near-term VXX puts. And we unfortunately continue to see a similar refrain in that VXX continues to stymie those people with several of our top 10 positions out here. Put positions for decent amounts that are going out today. So it looks like people are still tilting at that near-term downside windmill, Mr. Meatball and VXX. And
yeah, they are.
It ain't happening, at least not right now.
No, it's not. And, you've got to be patient. It's been hard to trend follow, which is what people think. And the idea that it's just going to go away and die and it's going to be zero at the end of the year, get that out of your head, people. It's just not going to be that easy for the time being. The crazy vol sellers are gone. So you're SOL if you think that it's going to be easy riding. Now, that doesn't mean there aren't some fun ways to trade VXX and make some money. I mean, that's fine. It's just not going to be the simple, easy thing that you think. And I'm sorry.
People unfortunately keep piling into these very, very near-term puts. And so far at least. Well, in Jan, they weren't too near-term. They had a little bit of more longer-term shelf life to them. But after Jan went away, we saw this flocking into these Feb puts, even in the weeklies that are expiring today. And so far, not so much. Again, we got a strip of Feb puts here that are open, and some calls as well, not all puts, in the top 10 here. So hopefully, in the top 20. Well, hopefully we'll see some interesting other stuff. Of course, these June 80s, also an interesting approach out there. Looking what people are trading out there today. So like I said, it was kind of light. We're seeing actually some call love out here. Feb 46 is one of the big prints of the day. Someone gobbling up 1,200 of those for a nickel. So it's not all puts all the time, listeners. People looking at maybe some near-term pops as well. Feb 35 is also getting some love. That's the biggest print of the day, going up for $1.40. Those are on the bid, though, so maybe a bit of some overwriting going on out there. It could be closing some OI as well, because that is not an opening print. March 51s trading 836 times today as well for 30 cents. Looks like paper buying those as well. So March 47s, 55 cents, about 700 times. So people are buying some upside here in VXX. It's not all near-term puts. Maybe in some of the people learning their lessons from the near-term wreckage that has been downside there in VXX. Let's talk some other news that's lighting up the vol space. This week, obviously, one of the big drivers in the equity land has been earnings. We saw some big names popping off before and after the bell earlier this week. Tuesday, we saw Disney, Snap, Electronic Arts. On Wednesday, we saw GM, good old Spotify, who apparently buying everybody in the podcast space these days. Hint, hint, wink, wink. If you're looking at something in the financial realm, we could talk. But in general, Spotify is spending a lot on podcasts these days, we always like to see some love for the old medium out there. On Thursday, we had Twitter, of course, WWE and Mattel, and this morning, we had SIBO. Let's jump to there first. Again, you can find all this for yourselves, listeners. I have to scroll a little bit. For you, it's actually kind of easy. Just head on over to theoptionsinsider.com, and then I will hopefully be able, if I keep scrolling, find the SIBO earnings moves report. That's what you're looking for, listeners. Earnings move reports for the SIBO. And I'm looking for it, and it's supposed to be here. So I'll just keep filling here. Let's see. But in general, they came out before the bell this morning. Search for, on our ticker symbol, on our website, I should say, listeners, search for ORATS, ORATS. There it is, and you should be able to find it. And if you do that, you'll see the one that I just found here for Mattel and for SIBO and a bunch of others. Let's look at SIBO first. They were before the bell this morning. They went into their earnings at exactly 95 even, which is interesting. They were pricing in $2.36. They ended up delivering $1.54 in total movement to the downside. So again, all this may be weakness of the futures, not exactly lighten up the stock here. I haven't had a chance to look at the numbers so far for what was driving. Actually, they're up now, though. As the day has gone on, SIBO getting a little bit of a lift, up nearly $1 to flirting with 96. So they were at 95 at the earnings. They sold off down to about 93.5. Now they're back up to about 96. So maybe the market changing their mind, deciding they like it after all. The market is a fickle beast after all. Either way, though. getting a little bit of love. So if you held on to your premium buys, maybe you should have acted a little bit more aggressively. If you were a little bit more, shall we say, reticent on the premium selling side to hedge, then maybe you had a better chance to take it off. Mattel, let's see, Mattel was at 12.36. They were pricing in $1.17. They over-delivered pretty substantially. They moved up about 3.21, and the current stock price, at least at the time of that report, was about 15.5. Let's see where they are right now, about 1504, giving up some of that, but still up about 270. So dramatically over-delivering over there on the earnings front. Let's go back a little bit and look at some other tickers that were lighting it up this week. Twitter, they came out on the 7th after the bell. They were pricing in about $4 and change. They closed at 34.16 going into their earnings. They actually delivered about 351. So again, this is just going into the report. Afterwards, intraday, subsequent trading throughout the rest of the days, all of that is obviously not factored in. So you have to adjust your time frame to compensate for anything else you may be seeing. Twitter out there right around $30 right now, 29.81 out there. So still off, well off, about 4 handles off. So that straddle net on the week actually looking pretty good. Let's keep on scrolling down here. Some other names that were popping off this week. Oh, good old WWE, one of the best performing stocks of 2018. Go figure. You signed some massive licensing deals. People like your stock. And so they went into their earnings on the 7th before the bell. They were trading just shy of $80, $79.76. They were pricing in $4.20, which was about a 41%, almost 42% implied vol. So that's pretty decently rich for WWE, and they ended up delivering about 280, so underperforming there, again, from a net vol perspective. That's all we're looking for here, listeners, and an underlying movement perspective. And, of course, WWE right now, 84.13 right now, so pretty much a little bit north. Again, taking a little bit of a bump, up about 0.75% today. It's another one of the rare names rallying in today's market out there. Let's see if we can find some other fun ones here. Disney, they were earlier this week on the 5th. They were pricing in, let's say closed about 112.66 going into their earnings. They were pricing in a little over $3, 3.11, and they delivered pretty much a big whomping nothing, 30 cents. So they were dramatic underperforming out there in terms of what they were expecting versus what was delivered. Right now, coming into about almost towards the latter portion of the show here, trading right around 111, so they're off $1.50 or so. So interesting stuff out here on the earnings front. Let's see if I can find, let's find a couple more here. EA on the 5th, Electronic Arts, they were trading 92.5. They were pricing in almost exactly $5. They delivered about 12.5 bucks to the downside there. So another one of our names dramatically outperforming their straddle in terms of net movement. Right now, hovering right around 94.5. Excuse me. So they sold off aggressively. Now they've rallied impressively of late as well. They hit a low of 79.25 back after that earnings drubbing. It went from 92.5 to 79.25. And then slowly, they pretty much have been, well, not quite too slowly. They shot up on Thursday, yesterday, and then they shot up again coming in apparently over the course of today because they're back up to 95, 10 handles. So apparently, whatever the market took out of that straddle and of that stock, they immediately put back in, which is very interesting. Maybe they collectively overdid it on that earnings sell-off. We see that happen a lot, but usually that's in the immediate blush after earnings when people are still digesting the news and the stock's whipping all over the place. Not usually several days after the announcement, so that's a bit of a weird one. Let's see if Take-Two had similar developments. Another big gaming name. They were coming out the 6th before the open, so right after EA, and they were probably feeling a little bit of that pain as well. They closed 107.25 going into their announcement. They were pricing in a fairly rich $7.67. They delivered almost 2x that to the downside as well, about $14 to the downside. Let's see if they're taking a lift today as well. No, they're not. They're still at 96 and change. So EA having a dramatic reversal of fortune. Take-Two, not so much. Again, that's what makes the drama, the pain, the agony of defeat, the thrill of victory out there in earnings season. Let's do one more really quickly. Goog, a.k.a. Google, a.k.a. Alphabet. They went into their earnings on the 4th. They were pricing in, they were closed at 11.41 and about a half. They were pricing in 43, almost 44 bucks on both of those straddles, Goog and Google. And they ended up delivering pretty much a heck of a lot of nothing on both, right around 10 bucks on both. And let's see here, coming into the show today. Where are we at in good old Alphabet? Alphabet at about 1,098. So off a little bit, about 50 handles from where that was on the earnings. So I guess, again, if you waited, it kind of delivered, actually about 40 odd handles. So pretty much almost exactly in line with the straddle. So interesting stuff out here. Mr. Meatball, I know you guys aren't huge earnings fanatics over there in the pitch chat, but it does cause some volatility. Any names that were drawing the eyes of your crazy in the chat this week?
Yeah, Chipotle was the big one. I mean, that was the outperformer. And then we also were looking at, a few other names. Disney was one we were watching, and those are the big ones. We're getting toward the end of earnings season, so it's not as exciting, but it's definitely been an interesting earnings season. I think some of the tech names that a lot of people thought were going to go out, kind of worthless, ended up being, or have garbage earnings were ended up being pretty good. And on the whole, I think earnings season was probably, not nearly as bad as people were worried about.
See, Chipotle, you stop poisoning people. Good things for your stock, right? Go figure.
It's amazing. You stop giving people diarrhea, and all of a sudden they'll eat at your restaurant.
People realize this food is kind of tasty. If it only didn't poison me, then I'd be all set with it. Speaking of being all set, let's see what you guys are happy or maybe sad about. We'll find out. It's time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, let's do it. Your questions, your comments, your drama, all your fun stuff. Let's kick things off with a fun one before we get into the meat of it. We asked you at the beginning of this week, everyone's still shaking off the Super Bowl haze. Which teams did you want to buy a call on to get into the big game next year? Again, not win the Super Bowl, just to get into the big game. So technically, there could be two winners of this poll. And we gave you four choices. Pats, obviously, the Rams, the Bears, legally obligated to put that one in, but you probably would have anyway. And then the Saints. Not as many people taking umbrage with the Bears inclusion as I thought. I thought there'd be a lot of outrage. Only a few people writing in saying, "What about the Chiefs?" But other than that, less outrage than I thought with this one. And right now we have the Pats taking the lead now, 37% here as we're pretty much winding in, coming into the home stretch on this one, followed by number 2, the Saints. Again, there can't be two winners, so there's no losers, except maybe the Chiefs because they're not on here. Number 3, the Bears. Getting more love for the Bears than I thought. Only 7% for the Rams, despite the fact that they were in the big game, and maybe they got there by some means people thought were dubious, so maybe that's why the Saints are getting some love. But either way, interesting stuff. Get on over there to Add Options if you vehemently disagree, if you're one of those irate Chiefs fans and you're saying, "What the heck?" Get on over there. Let your voice be heard. Like some of our other listeners here, AJR Trades, writing into us right now saying, "Do you guys have an iTunes podcast?" Well, yes. Yes, we do. I don't know where you're listening. Maybe you're listening to the live chat. I don't know where you're listening to us right now from. But yes, we do. This show is called Volatility Views. You can type that into iTunes and you can, or any podcast provider, and you can find it all. If you don't want to miss anything, the easiest thing to do is just subscribe to our full network. Subscribe to the Options Insider Radio Network. Type all that in, or some derivation therein. If you type in one of our show's names, guess what? It's going to come up in the shirt's titles too. Subscribe to the network, then you get everything. You get Vol Views, you get Option Block, you get the Advisor's Option, you get the daily news, you get all the fun stuff, Crypto Rundown, all that fun stuff, so you don't miss anything. Or you can just go grab our app in all of the app stores, and that also has everything in it as well. And it's pretty cool. You can build your own playlists in there. You can do all kinds of cool stuff. There's auto mode, all kinds of cool stuff. So if you take the app, then also the app will give you access to all the back catalogs. You guys, you can go for days in that thing. Trust me. It's a lot of content. It's a decade, actually 12 years now. It's scary. 12 years worth of content in there. So short answer, yes, we do have an iTunes podcast. Yeah, I love the new listeners coming in and discovering things new. Speaking of new listeners, this guy is not a new listener. He's been listening for a while. He's written in a couple of times. He actually has some good comments about his trades, Mark. So he wrote in with some feedback. Here, this is Brian Collamer. He says, "Hi, Mark." Well, hello, Brian. He said, "I listened to the last VolView show and heard you mention my trade again, and I thought I'd set the record straight." Remember, Mark, this is the one where we thought first off he sold the 1x2, but then he bought one, sold two, and we kind of got into all that on recent shows. That set off a bell, sir?
Yes.
So he's writing in to clarify, I guess, some stuff. He said he thought he set the record straight. This trade was in his Roth IRA, so he can't be naked anything. So there you go. So you couldn't do it that way. Sold 115 call, bought 219 calls. Okay, so he did do it the way we hoped. He got a credit of nickel. Did I buy or sell to open this position? Oh, he's asking a bit of a question in his question. He says yes, he closed the position for a debit of 7 cents. Did I buy or sell to close this position? Round trip, his little questions there at the end are interesting. Round trip with commissions cost was a little under $30. Probably should have bought Salvo's book instead of giving $30 to TD Ameritrade. So I think I had the right idea for a hedge, just got the moneyness of the strikes wrong. So yes, we also talked, one of the other questions, so at least he did it the way we like it, which is selling one, buying two. The other thing we had an issue with, as you recall, Mark, was he had done it at the time, though that 15 handle was like several handles in the money. That was a meaty call that he was doing the 1x2 on, which is not the way we typically see it. Like we talked about it today. What was it? It was 1721, 20,000 by 40,000 times. That's a much more normal use case for this 1x2 than it is going. You're not seeing that guy doing 15, 17, 20,000 by 40,000. You know, that would be interesting. But we just don't see that use case. It's not really the way it was intended. Not to say it's terrible. It's just not really not the optimal way to construct that. He follows up with a new question. He says the VIX curve was very flat. March call prices were very close in price to May calls. Since I'm paying almost the same price for a May call spread versus a March call spread, does it make sense to get more time to expiration? He's getting his terminology, I think, wrong again. He's buying. He is selling the spread. But in general, yeah, I mean, it's these things are all about trading, right, in terms of getting yourself table stakes. So if you can get yourself a decent execution on May versus March, why would you not want to take that, Mr. Meatball?
I agree.
I mean, there's not really. That's an easy one. Not a lot to debate on that one. If you can get it off.
No, there's not. Yeah. You know, the only reason why you would move around is just the amount of sensitivity you want. So you do have that part, but yeah, I agree with you.
Yeah, what we just say about the one we just talked about, the 20,000 by 40,000, 17, 21 one in March, our one issue with it was maybe not enough time for it to come to pass, right? And a little bit far out of the money. If that guy had that by May, that's a different story, right?
Yes. So it's really just a small trade-off, right? It's probably going to be a little cheaper, but it's going to be in near dated. It'll be potentially cheaper, but it will also be and more sensitive. But you have a lot less time. You know, normally when I set these up, I'm looking at the 60 to 70 day time frame, not 30 and not 90. I find that that's kind of the sweet spot for you know, where you get the right combo of sensitivity and time. And then I roll usually within 30 days to expiration when I set these up.
Yeah, there always is that little bit of a sweet spot, isn't there, for all these different
really
positions.
Is.
And this one, this is another one. If you go too crazy far out, that could also be an issue. But yeah, what you're talking here, if you can get a little bit more, I think it's not the worst thing. Or you maybe like Mr. Meatball's sweet spot there, around the 60 to 70 days, which I have to concur. That's not a bad range to put these on. It's a little bit of both, right? A little bit of responsiveness and a little bit of time to actually get your trade, have it actually work. Because if you do these in the weeklies going out next week, chances are probably not gonna work. Then you're doing pure kind of lottery ticket stuff. But you give yourself a little bit of time, and you jigger right into that sweet spot. Then let's see, you're looking pretty good. Oh, we got people following up on that question too. B Pin. He says, I heard your discussion of the listener question from Brian Collamer on the last few episodes. Well, we just talked about it again. He says, seems like the main concern was being short. He puts unites, but I think he means units. Can you clarify what you mean by that? Cool show. Oh, he has a corollary question, or an add-on question, a follow-up. What do you guys think of the VIX coverage on zero hedge? that's a whole conversation in and of itself. Let's start with the beginning. He wants to know, well, obviously Brian clarified that for us. We had thought he was buying one, selling two, which we didn't like. He clarified that and said he was actually selling one, buying two, which we like a lot more. The short unites, aka units, the reason what that means is just being net short on strikes, let's say in this case calls above the at the money. So if you start blowing through these strikes, you're going to be net short. And that's what we're talking about here. That term units, it comes from, it was an old floor term, because at the end of the day, remember on the floor, calls or puts or calls, they're all hedged anyway. So on a strike, it was just essentially how many units. It didn't matter if you had calls or puts or everything else. Just how many net units were you open or short on, or open essentially, long or short on a strike. And that's pretty much all anybody cared about. So if you had something where you start looking at a bunch of strikes and you were net short a bunch of units, that was a cause of concern maybe for your risk manager. If you start blowing through strikes, that's where risk can really get out of control. That's where all these massive blowouts that you see happening, like in nat gas recently, or in pick your poison, Febocalypse, and all these guys were long 1, short 8. In things like the VIX. So guess what? It doesn't really work out that well when it all hits the fan. That's why people say net short units is a dangerous thing. That's where the blowouts, that's where the craziness happens. Mr. Meatball, would you concur with that, sir? Are you not a fan of, I know you're not, but let's reiterate it anyway, of being naked short units?
No. What I always tell people is you should be either neutral or net long options. Never net short.
Now, unites, I'm short unites all day. I hate uniting. I think we all should be very divided. Yeah. So I'm sold on that. But units, I like to be flat. Let's the other part of his question, the more, shall we say, interesting part of the question. What do we think of the VIX coverage? I think it's charitable to call what Zero Hedge does on anything coverage. Zero Hedge, they have an MO, right? The whole thing is look, the icon is the guy from Fight Club, right? Tyler Durden. I mean, they're there to throw a bomb in the room and then to see what happens, and enjoy kind of the chaos of the aftermath. So they post a lot of stuff on a lot of different things that are designed to exacerbate. That's kind of what they're up to. So if they can find something that's histrionic in VIX, they will run with it. Some of this stuff actually can be kind of interesting if you can parse out the nuggets from just the pure histrionics out there. But yeah, you have to kind of take what you see over there with a bit of a grain of salt, because that's kind of their MO at the end of the day. Would you concur with that, Mr. Meatball?
Yes. That is what they're after. They are not, they're not looking to not stir controversy. Let's put it that way.
Look at you being so agreeable today. Who is this Meatball out here just agreeing with everything I say?
Zero Hedge is, listen, there could be some interesting news, and they have some takes that can be interesting, right? We all love interesting takes.
Yes, hot takes. They're the hot takes of the financial world.
They are the hot takes of the financial industry. That said, sometimes their stuff's pretty good. Sometimes they actually do get it right.
They may have an interesting piece on like VIX term structure, but it's sandwiched between, a piece on Putin is destroying the world and Hillary Clinton assassinated 48 people, and all these other crazy things you have to dig past to get to the meat, which is why I kind of look at it with a bit of a big grain of salt. And I think most out there, too. It has its place, as long as you understand what that place is. All right, let's wrap up. Let's get away from the craze. Let's wrap up with some positivity, some love. Coming from in another language. This came from French, from Options Game. And in French, he wrote, you should follow the Options Guys. It's good podcasts that will give you ideas. Well, I don't know how to say that in French back to you, but thank you. I know how to say that, merci, but I don't know how to respond at length in French, so I'll leave it at that. But thank you, Mr. or Mrs. Options Game. We love the love. We love the French. That we've said it many times. There's a huge penetration with the French and the volatility space. I don't know why that is. I've asked many people over the years why that is. I've heard many different ideas as to why that is, why there's such a concentration of interest in volatility and in SPX over there in France. But for whatever reason there is, and we're happy to see that you guys are loving the shows. Keep it up. Meanwhile, we're gonna move on to some of our own VIX love. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we're looking, laughing, loving at ourselves usually for all things VIX, and when we attempt to wrestle down the slippery pig of VIX Cash. And coming down to the showtime, we're flirting right around the 1670 plus or so level. So we're looking at about a 0.35 away from my prognostication. Again, it was exactly 17.05 starting the show. So I'm still going to count that as a fun bullseye, even though it wasn't technically at the end of the show. And within 0.3 or so, I'll take it. Not a bad week. Mr. Meatball was there at 15.25, so he's about a handle and a half or so off on that. He was feeling the fade, not so much this week. But that means I win. So that means I get to choose whether I want to go first or have the Meatball go first. I shall go first, because it's more fun, I think, that way. Let the Meatball, he's just going to pick 15.25 again anyway. We know what he's going to do, so we can let him stew in his own juices for a little bit over there. Let's see, 16, let's say we said about 1670 or so. We had another interesting week where we had, rallies, vol came off, and then sell-offs, and vol came back in, came back up. Kind of like I thought last week. This week, we could see more issues on the trade war. Maybe it will be more conciliatory tones out there. The end of this week certainly wasn't, so maybe that could happen. Again, that's kind of the big wild card out there. We are at the tail end of earnings, so usually there's a bit of a damping effect with earnings around broad index volatility. Maybe that will start coming to an end. Maybe we'll see a little bit of vol kicking in there as well. I'm not too upset. I give Meatball a hard time for this, but I'm not too upset at where I am this week for next week, around the low 17 level. I'm just going to have to pick a level. I'm going to say actually a little bit higher again. I'm going to go back to 17.25. I'm liking that level, Mr. Meatball. So I've given you enough time to think. Are you going to say 15.25 again? What do you got up your sleeve, sir?
I'm still going to fade the market, but I'm going to give it a little more room. I'm going to go to what won for me the last time. I'm going to go to 16.25.
16.25. All right, let's put that down. Put that down on. That would have been good this week.
Mark that down, folks.
Mark that one down. So we now have a nice one-handle range again. Staying pretty tight. We were a little bit wider last week. We were about 1.8 handles or so. This week, keeping it tight. One-handle market. You guys have your thoughts? You have your issues? You have your own prognostications for VIX? You think this is easy? You try your hand at it, listeners, week after week. See how well you do out there in VIX land. Of course, that music means, unfortunately, we are done for this episode of Volatility Views. Oh, what a fun one it was. We talked about all kinds of things. VIX futures, VIX options, some of the term structure, some of the trades, the emergence of spikes, top trades, hot trades, good stuff. VXXB. When the hell are we going to get rid of that name? We don't know. We hope it's soon. What's trading out there? What's not trading? Your questions. All sorts of good stuff. A lot of fun stuff. Oh, earnings as well. A lot of earnings vol popping off this week. Mr. Meatball, people like themselves some VIX. Maybe not in French, but definitely in English. And they want to learn more from you guys. Unless you have a French version of your webinars, I don't know. But where should they go? What should they do, sir?
Go to optionpit.com and give us a look-see. Or, again, if you're looking for a smarter way to trade the S&P 500, I have the solution for you at the Carmen Line Capital. Come and email me, market@carmenlinecapital.com, and I'll be happy to talk to you about it.
Email them there, Market Carmen Line. That's with a K. Remember, that's a K. He likes to test you with the name.
Yeah,
there.
I do.
Line Capital. Capital not with a K. Then he'd be like Mortal Kombat, everything with a K. That would be cool, but no. He's not. Actually, that should be interesting rebranding. Capital with a K. What do you think? KK. What could go wrong with those? What could go wrong with so many Ks in your name?
Yeah, that's like cars for kids. I'm not into that. I'm sorry.
What could go wrong with such thing? Either way, Carmen Line with a K. Check it out, Mark at Carmen Line Capital to learn more, or head at marketoptionpit.com to learn more about that as well. And on behalf of the Meatballs, throw the Rock Lobster some love as well, and indeed myself. I want to thank all of you out there for downloading, streaming, subscribing, sending in questions, participating in the live chat, voting in our polls, all the fun stuff that you guys do, sending us tweets in French. We love it all. And we'll see you back here on Monday for Option Block, and then throughout the week for all of our good stuff, and then back here again on Friday for more Volatility Views.
The
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.